Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I Tell.
All right, my name is Mark Eitel, and you are tuned in to the Mr. Mortgage Show. Guys, we do this every week right here, same time, same station, and you are in the right place if you want the data, the information, not the headlines, but the real stuff behind the headlines, the real data, the information, the tips, the tricks, the strategies that you need so you can go out there and make better real estate and mortgage decisions for you and your family. If that is you, you are in the right place, guys. We do this each week. As I mentioned, Dom is in the studio with me. He is manning the board as well as the Anytime Hotline. And if you've listened to the show for any length of time, you know your questions are my favorite part of the show. And we're going to get to those in a little bit here, but get your questions on the air by calling or texting 855-462-7292. That's the Anytime Hotline, 855-462-7292. Dom is standing by, and he will get your questions on the air. If you prefer to do it via email, just visit the website, mr.mortgage, never a .com. Just type in mr.mortgage, hit enter, will pop right up in the upper right-hand corner of the page is a contact us box, and you can type your question there, hit submit, and Dom will pull it off the internet for you. So super excited this week. Man, what a crazy, crazy week in interest rate news, financial news, just a lot of stuff going on. We're coming down to the wire with these midterm elections and everybody's slinging mud. And in the middle of the big mud storm, the Federal Reserve hiked interest rates another 3/4 of a point. No surprise to anybody, especially not our listener base. You guys are probably, not probably, you are far above the average consumer when it comes to understanding mortgage and interest because you're with me each week right here. So, yeah, not a surprise, but it was quite interesting. A lot of emotion around it, right? The market was up, the market was down, and a lot of people are curious to know what is that interest rate hike going to do to the housing market, right? Because it just seems like everyone is so hyper-focused on this quote-unquote crash that a lot of people think is coming. And guys, I still don't think it's coming. And we're going to cover all of the data to support that opinion during this week's show, as well as take your questions. But, a lot of people are anticipating a big wave of foreclosures. And you've heard me talk about it so many times on the air, and you'll hear it many, many more times that, supply and demand is the only fundamental equation that controls pricing of anything, right? We've talked about it, whether it's tulip bulbs or real estate or Bitcoin or pickles or cars, whatever you're buying. If more people want to buy it than want to sell it, prices are going to go up. And if more people want to sell than want to buy, prices are going down. And a lot of people are super mesmerized by what's going on in the housing market because interest rates are no longer marching. They're soaring up, right? We were in the 2s and 3s at the beginning of the year, and now we are firmly entrenched in the 7s. And a lot of people are like, wow, how is this not killing the housing market, right? Because housing values are still appreciating. And we read all the headlines every week that the volume of sales is falling, which is absolutely true, right? There are less sales happening each month over month and year over year. But here's the thing, guys. There's still more people who want to buy than want to sell. And what's happening right now is quite interesting. So the Federal Reserve keeps cranking on the interest rate dial, and the mortgages are moving right now in lockstep with what the Fed's doing, even though what he does doesn't directly influence mortgages. And we can talk about that for days, and I'm happy to do it. If you have questions around that, just call or text. But it's interesting because as money is becoming more and more expensive, it's more difficult to qualify for the home that you really want, right? That's a no-brainer. Everybody gets that. In January, you may have qualified for a $600,000 house, and that might buy you $400,000 now. But here's what's really, really interesting. There's still no supply coming to the market, even at this anemic demand level that we're seeing because of the cost of money. So yes, the cost of money is starting to take effect. It's slowing the demand down, but it's also slowing supply as a byproduct. And what I wanted to share just very briefly is if you're sitting at home with a 2 or 3% interest rate, you're very unlikely to be motivated to sell right now, because you're not going to sell and pay a higher price for your current home or a comparable home. And then, you're paying double in interest what you would have as recently as a year ago. So there's a big segment of the market that's not motivated to sell, and that's slowing supply. We also have builders coming out announcing that they anticipate far fewer housing starts next year. Again, more pressure on supply. And then in the past, we've anticipated this big, they called it the silver wave, right? It was going to be the baby boomers downsizing, simplifying their life, and all these big family homes coming to the market. Guys, that's not happening either, because seniors are living longer and healthier than ever, and they've got more equity in their homes than they ever imagined because of the recent appreciation cycle. So they're sitting tight and doing reverse mortgages to take out the capital that they need to live a comfortable life. So that also is putting pressure on the supply side. And then here's something that's super interesting. You heard me reference that a lot of people are anticipating this big wave of foreclosures. And if that was to happen, there's the supply necessary to start to tip the scale, right? But it would have to be a lot of foreclosures, and everybody is remembering back to 2008, 9, and 10 when that did happen. So it's not unreasonable to assume that history could repeat itself. But once you look at the data does not support history repeating itself. So Bloomberg had a very interesting article this week, and they offered a ton of data to support this, but it was super interesting, right? They came out with an article that said 3.71% of owner-occupied homes are behind on their mortgage. And that really caught my attention, right? That's almost 4%. If 4% of the housing market suddenly went into foreclosure, well, that's a tick up in supply for sure, and that might affect where we're going housing value-wise forward from here. But this is what's interesting. So I really just like to digest the data. So I went past the headline, and in that same article, they mentioned 60.43% of mortgaged U.S. households, primary residents, they're fine. Their mortgages are paid on time, they have a bunch of equity, and they've got tiny interest rates. So there's a big chunk of the population that's rock solid, right? 60 point something percent. Well, here's the one that really, really got my attention. 35.47% of owner-occupied U.S. households have no mortgage at all. So right there, we're looking at, what is that, 90, 95, 96% of the population with either mortgages paid on time or no mortgage at all. So then I dive back to that 3.71% and read a little deeper in the article, and they said 1 out of 5 of those people fear losing their home to foreclosure. Well, let's digest that for a minute. 1/5 of 3.71% is 0.74%. So less than 1%, less than 0.75% of mortgaged U.S. households, owner-occupied primary residents, are fearing of a pending foreclosure. And right there, that just put my mind at ease that there is not a big wave of foreclosures coming to the market, at least not right now. So another El Scorcho job number was released yesterday. And guys, this is where I caution you when you're looking at these forecasts and you're reading these articles. These are just guesses, right? Because the target number was 210,000, I believe, was the target for job creation. And then a couple of different economists, the KPMG, I can't remember her name. I'll give that to you here in a minute. But anyway, they forecast 160,000 to 170,000 jobs. It was Diana Swoke. I'm sorry if I mispronounced your name, at KPMG. And then Tom at Jeffries, 160 and 170. Well, guess what, guys? That number came back in the 260,000 job range, blowing the expectations off the table. And what that means is the economy is still stronger than a lot of people think, which means the Federal Reserve needs to keep cranking the interest rate dial, because he needs to kill this red-hot economy to get inflation under control. So based on that, I don't see any change in the Fed's stance. And right now it looks like we are still in an ascending interest rate market, but the good news is real estate values are definitely supporting themselves in this current market based on the supply and demand equation. But guys, you hear the music, you know what that means. That's my cue. We'll be back in 2. Sit tight for 2 minutes on the other side of this break. We'll be back with more of the show, and we're going to dive into your questions.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant files our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you heard the man. If you have questions or comments, or you need directions to the studio because you want to bring us some breakfast, just call 855-462-7292. Call or text your questions to that number, 855-462-7292. That is the Anytime Hotline, and Dom will get your questions on the air. But guys, you heard me wrapping up that first segment talking about The Economist, and I'm not poking fun at anybody because this is definitely a hard economy to read. But it was Tom Seamus and Diane Swank, if I'm pronouncing that correctly, both the Jefferies and KPMG economists. They were looking for a jobs number in the 160 to 170,000 range, and the most conservative, or the most aggressive rather, forecast was 205,000. Well, we blew way past that at 261,000. And the reason that I'm sharing this is, if you're reading the headlines alone to try to gauge how you're going to make decisions in your life, this is one more example of how some of the talking heads are just kind of throwing darts at the board right now and not always getting it right. And, you know, we've talked about it on this show many, many times. You know, the most aggressive rate projections moving into 2022 was a rate somewhere between 3 and 4%. A lot of people were saying we weren't going to eclipse 3.3. And I get it. It's unprecedented times. But the reality is these guys that are cranking the levers should be a lot smarter than us. But God, oh God, they seem to keep missing the mark, if you will. So with all that being said, those guys, they missed the interest rate projections. And here's another miss on job growth and job creation projections. So the reason I'm sharing that is it's up to all of us to manage our own financial homes, if you will, our lives. We can control the four walls around us. So don't look too far outside of that. You know, grab the data, digest the data, and let it help you make the best decision. And I guess lastly, let me share this, because you've heard me say it 100 times, that emotion and logic can't run the same brain at the same time. And if you don't think that's the case, man, I had a recent experience with one of my buddies. He's probably the most logical guy that I know, and a brilliant, brilliant man when it comes to numbers and, economic projections. This is just a really smart guy. And he went over to Harley Davidson. They had a sale. He was going to buy a new bike. So he asked me to ride his old bike over there so he could trade it in. And I wanted to see what was going on anyway. You guys know I'm, a bit of a car head or a music head or a motorcycle head. So I jumped on his bike and met him over at Harley. And he was caught up in the emotion. It wasn't a logical decision. He just got super excited about buying a new bike, and he was going to trade his old bike in. And, the only thing that prevented it from happening was it was a Sunday evening, and it was last weekend. And they were unable to obtain the payoff on his current bike. So they all kind of just agreed to reconvene Monday morning at 10 a.m. and finish the transaction. Well, guess what happened? My man's logical brain took over when he left the dealership, and he looked at, do I really need a bike? He's watching me ride his beautiful motorcycle home, and he's following me saying, hey, I really like that bike. I might as well just keep it. So my point in that was emotion was driving that decision, and then logic jumped back in and changed his mind. So guys, money moves based on emotion, and don't let that be you. Don't get caught up in it. Take a step back, digest it, look at the numbers, look at your budget. Does it make sense? The nice thing about housing is, I guess the reality, I was going to say nice thing, but it's not nice because it costs us money. But the reality is it's not a payment that you can avoid, because you're either paying rent or you're going to pay a mortgage. It's not like there's an option to live for free. My buddy buying the bike, he had an option. He already had a bike. I guess there are a host of options. You could ride the bus, you could walk, whatever the case may be. But with housing, that's an expense that you already have. So if you can replace rent with a mortgage, it still makes a lot of sense. And we're going to cover all of the data points to support that this week during the show. But you heard me talking about your questions. I'm going to throw it over to Dom here in a second for questions. If you have them, call or text 855-462-7292. Dom is manning the board, and he'll get to your questions. And speaking of that, hey, Dom, what do we have?
Helen sent this one. If we take a reverse mortgage and use the credit line option, what happens if property values drop? Can the credit line be closed like a HELOC can?
Hey, that, Helen, is a brilliant question. And one that I haven't had before. So well thought out. And that's a great question. So for people who don't know, when you do a reverse mortgage, you can take a lump sum payment at closing and cash out that equity. You can receive a monthly payment where they're paying you a little bit of your money every month. And a lot of people like that because it's increasing their cash flow. And cash flow is oftentimes the challenge later in life when we're trying to manage our households on a fixed income. And either one of those options, there's a balance remaining that's available to you that's left in a credit line. And it operates a lot like a HELOC or a home equity line of credit, with the exception it's actually earning interest. So let me jump back to your question, Helen. No, that can't be modified, changed. It can't be called. They're not going to close it because they've already loaned you that money. It's already yours. It's placed in an account for you that's bearing interest that you can draw against as you need, where a home equity line of credit is a credit line that's extended and leveraged against the equity in your property. So to your point, if property values went down, you would now have less equity, which would allow the lender to reevaluate either the amount or the terms. And sometimes they'll just close the equity line out. We saw that in the early 2000s. When property values started slipping, they were trying to get ahead of it because they had no idea how far they were going to go down. And a lot of people's lines just got closed. And I know several people who had balances, right? They had a $100,000 line. They had used $30,000. So they just took the $30,000 and they capped the line there. And then once it was paid off, they closed the line. So yeah, brilliant question. With a reverse mortgage, that equity piece that is available to be drawn against in the form of a credit line, that's your money. So if values go down, they're not taking that away from you. And I guess to that point, if values go down, a lot of people have the misconception that the bank can come after the estate for the balance, right? So let's say, Helen, you live a very long, robust life and you owe I don't know, $300,000 on the property when you die, but it's only worth $200,000 because let's say this housing crash does happen. Well, the cool thing is it's a non-recourse loan, so your heirs can just pass the keys back to the bank. The bank is insured against that loss, so they don't mind. Nobody gets hurt in that instance. And the really cool thing is the estate doesn't have to liquidate any other asset positions to satisfy that. It's fully non-recourse. So super exciting feature of the loan product. But I appreciate that question. If you need more info about that, just give us a call during the week, 855-462-7292, affectionately known as the Anytime Hotline. But let me throw it over to Dom and see if he can pull another question off the hotline.
Dion sent a text. I have a full-time job, but I also work as a referee and umpire for the school district. Can I use the income from officiating on my mortgage application?
Neon Dion, what's up, brother? I don't know that you're Neon Dion, but hey, that's a brilliant question. And yes, so you can use part-time income if you have a 2-year history of that part-time income. And then there are, we have to look at the consistency of it. But it sounds like you're officiating more than one sport. So it would be interesting to take a look at that. But yes, the guidelines do allow for part-time income or second job income, but we're going to look for a 2-year work history, and then we're going to look at the consistency of it, right? So it's not like you're officiating 20 games for 3 months and then no games for 2 months and then a couple games here and there. We need to evaluate the consistency of it so we can use an averaging calculation to determine how much of that income we can use. But to answer your question, you're already starting off on the right foot in that you can use part-time income. But hey, I bet that's super cool, or maybe not. I used to have a buddy, Ron, who was big into baseball, and he coached his kids up into the minor leagues. And he was an umpire, and he wanted me to officiate some games with him. But I was intimidated by the angry parents. But he loved it. He was big into youth sports and how sports can develop a child's ability to, understand how to win and how to lose in life. And, that kind of brings me back to reminiscing about the old days. I kind of think we need to go back a little bit in that direction and be okay with taking our lumps in life and realizing that sometimes they're often the best lessons, and then we can evaluate how we're going to go after the next opportunity and take advantage of the next hurdle in life rather than just wanting life to change for us. So all that being said, I hope that helps. That was a brilliant question. Thanks for that. And brought me back down memory lane, and my old buddy Ron, who was an umpire for the youth baseball group down there. And anyway, I'm reminiscing. I'm drifting. Let me take a sip of my coffee here. But you hear the music. You know what that means. That's my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, we are going to dive into more of your questions. Sit tight.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com. It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are still tuned in to the Mr. Mortgage Show. You're either having fun or you're a glutton for punishment, but either way, we're excited that you're with us. Dom and I do this each week right here, same time, same station. Dom is my producer, and he will get your questions on the air. If you have questions or comments, if you want to tell me I'm awesome, or hey, maybe you think I'm a jackass, I don't know. I'm probably a little bit of both, but hey, if you have comments or questions, call or text 855-462-7292. That's the Anytime hotline. 855-462-7292. And speaking of your questions, we've had some great questions so far today, guys. We started off talking about, credit line options and how that works with a reverse mortgage. I thought that was a brilliant question. I think that was Helen that brought that up. And then I was just joking around with Dion about refereeing and umpiring high school sports, and he was curious if he could use that part-time income to qualify for a mortgage. And hopefully you guys found that interesting. If you missed that, if you're just tuning in and you're curious to hear what we were talking about, we opened up the segment talking about the Fed raising interest rates and the economic repercussions of that and what it's going to do to housing, or at least what I think it's going to do to housing, and maybe more importantly, what it's not going to do to housing. But anyway, if any of that is interesting to you and you're just tuning in, you can always catch the replay of the show. Each week after we leave the studio, Dom posts the recorded version of the show up to the podcast page online, and you can find that at MrMortgageRadio.com. That's MrMortgageRadio.com, and that'll take you right to the podcast page. And I think, I might be wrong, but we're 80 or 90 episodes up there, so there's a lot of the Mr. Mortgage musings to entertain yourself with. And hey, if you check it out, just drop us a line. I'd love to know what you think. We're always trying to grow the audience, and you're so much a part of it with your questions that it's super important to me to know what you think and if there's other topics that you want us to touch on. But enough of the housekeeping. We are going to keep your questions rolling. I know Dom said we had some stacked up during the break there, so let me throw it over to him.
Manny sent this one. You were talking about the new 100% loan for first-time buyers, not the Hometown Heroes, but a different one. How does this work?
Hey, that's a great question, Manny, and thanks for that. Yeah, I think it was a couple weeks ago I was talking about this new program that we were about to launch. Well, guys, it's live, and I think we're going to set up a landing page on the website to explain it because it's super cool, right? It was this time last year, I guess, that Florida developed that Hometown Heroes program, which is awesome. It's a second mortgage grant, if you will, that allows you to get to 100% financing. And I talk to people all the time that they think their credit's the issue or their income's the issue. And there are a lot of people who can qualify for a certain monthly payment based on their credit. They've got good job history. But a lot of times it's that down payment piece that's a big challenge. Well, that Hometown Heroes was designed to alleviate that problem, right? Now you can borrow 100%. But it left a lot of the population out, right? And they went after, first responders, medical professionals, teachers, all of the, important jobs, right, to run our community and our economy. And I'm a big fan of that program. But, the waiters, the waitresses, the people outside of those core hero, quote, professions were left out of it. Well, this program is inclusive, so there's no restriction on jobs. It's heroes and everybody else, first-time buyers. And the cool thing about this, where Hometown Heroes, that second mortgage doesn't require a payment and it doesn't accrue interest, but it does require a repayment if you sell or refinance the house, right? So This program, it's a forgivable grant, and it lays on top of an FHA loan. So you get your FHA approval to 96.5%, right, which is the standard maximum loan to value for an FHA loan. And then this program gives you the 3.5% as a forgivable second. And it's forgivable right out of the box. It's not like 5 or 7 years down the road. If you sell the property in a year or 10 months, that 3.5% second is forgiven. Heck, if you refinance it that soon, it's a forgivable second. So super exciting. If you meet the requirements for the FHA guidelines, which are broader underwriting guidelines than a traditional conventional loan, then you're all set with this. And it's 100% financing, first-time home buyers. And by definition, in the world of mortgages, first-time buyer is someone who has not owned a home in the last 3 years, which a lot of people are excited to hear because that opens them up to programs like this. So hopefully that helps. That was a brilliant question. I can't talk enough about that. I'm super excited about that program because I think it's going to make a difference for a lot of people. And another question we get around that is, yes, you can get a seller contribution to pay the closing costs or to buy the rate down up to 6% of the transaction price. So super exciting. I think it's going to give a lot of people a path to homeownership that might have been boxed out in this recent market. But thank you for that question. I hope it helps. Let me throw it over to Dom and see if we have another question.
We do. Rebecca sent this. How can buying a house now make sense? If rates keep going up, prices have to start coming down, right? I really want to own a home, but all my friends say to wait for a correction. Any advice?
Hey, you know what? Yeah, I didn't mean to laugh. It's so challenging, right? Because when we're trying to make these big decisions, we're getting information from people all around us, some of which may not even be qualified to have an opinion on a topic. And I'm not knocking any of your friends, but I would be super curious to know, of the people who are saying it's not a good time to buy, how many of them are actually homeowners versus renters? Because we talked about my buddy at the Harley dealership last weekend and how emotion and logic were really battling it out in his brain. And I think that the fear of buying a home right now is the emotional side of it, right? Because you see the headlines, interest rates are soaring and home sales activity is slowing. But prices are still appreciating. There was an article last week in CNBC that said new home sales are down, I think, 18 or 20% year over year, but values were up almost 15%. And that's mind-boggling. So I think your friends are probably super well-intentioned, but it's emotion, right? If you're just reading the headlines and you're saying it's a bad time because of all of these swirling uncertainties, they're just that. They're swirling uncertainties. The reality is you're most likely making a payment right now. So I would look at that payment and see what you could buy for that payment. And if you need some help with that, go to the website, mr.mortgage, never.com. Just go to mr.mortgage. And on the upper toolbar, there's I think the link says free tools or tools. If you click that link, there's a very, very detailed mortgage calculator. And you'll see some really insightful data there. You can plug in your payment, plug in the interest rate of the day, and see what you would qualify for, because I think you might be surprised to learn what you can actually buy still in today's market. But here's where I'm going with it. If you have to make a payment each month, it should be a mortgage payment if you can afford it, because you're building equity. Even if housing never appreciates again, each month that you make that payment, you are lowering your principal amount. And I get it. It's not as sexy as appreciation, right? We've talked about it before. There's an episode in the podcast library called They're Both Equity, where I talked about the sexy sister and the homely sister, or the sexy brother and the homely brother, not to make it a sexist thing. And the sexy sister is appreciation, and the homely brother or the homely sister is principal reduction, right? But they're both building equity. So that episode is called They Are Both Equity, and it explains the difference. But I guess my point in this is each month that you're making that payment, you are building equity by reducing the loan amount. But here's a really cool thing. You get to write off the interest. You get to write off the insurance. So a portion of that payment that you make every month is actually a tax write-off. So in addition to building equity, you're also reducing the income tax that you pay. So there's just a load of benefits to owning. And I think that you really need to get that logical brain kicked in and just look at what you could afford. And if there's something out there that you like and it's within that budget, I would encourage you to do it, because I know people who bought real estate when the market was crashing. I know people who bought real estate when interest rates were double digits. I'm one of those guys, and time seems to heal all in real estate. And guys, I can't say it enough. You're going home somewhere. You need a place to live. It might as well be yours. And one of the super cool things is, let's say down the road you want to turn it into a rental property and let somebody else pay your asset off for you. So anyway, I still think homeownership makes sense. I appreciate that question. I would love to have a deep diving conversation with you off the air. If you just want to walk through some scenarios, you can give us a call. 855-462-7292. But you hear the music, you know what that means? Dom is jumping up and down back there telling me, stop talking, we need to take a break. So we're going to be back in 2 minutes. Sit tight. On the other side of this break, we'll be back with more of the show.
It's not every day that you need an appraisal, whether it's for a divorce settlement, estate planning, or maybe you're appealing a tax assessment, or you just want to make sure you have adequate coverage in your property insurance. When you need a certified appraisal, turn to my friends at soflappraisal.com. That's soflappraisal.com. Peter and his team have been appraising properties here in South Florida for decades. soflappraisal.com. And tell them you heard this on the Mr. Mortgage Show.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you heard the man. Call or text your questions to 855-462-7292. That's the Anytime Hotline, 855-462-7292. That is the number you call or text to get your questions on the air, and Dom is manning the board and your questions coming in over the hotline. So, hey, I don't know, you guys may or may not have caught me stammering there a little bit while we were going into the break, because I heard somebody's cell phone go off, and we all put our phones on airplane mode when we come in the studio. But Siri heard me say something, and she thought I was asking her a question, and we were just laughing during the break about that. I got to share something. I was at an open house. This is a few years ago, and it was back when. Hey, Dom, what do you call that? Is it Alexa?
Yeah, yep.
Okay.
Alexa, there's also Google has their own.
Okay, so I think it was Alexa. That's the one that's hooked to Amazon?
Yep.
Okay, so there was one of these pods, if you will. If you have an Alexa, you know what I'm talking about. It was sitting on the counter. And we were making jokes, right? It was back when we were all wondering if the internet is listening to us. And you say something about, God, that neighbor had the most lovable three-legged dog. And then all of a sudden, all of the SPAC, I think it's called, commercials are popping up on your Facebook feed asking for donations to save the lives of homeless pets and three-legged dogs. And, it's quite amazing at how these devices are monitoring us when we don't even know it. But anyway, back to the story. So all of this was just coming to light, right? People were putting these Alexas and these Google Dots in homes in their houses and, talking, hey, Alexa, turn on the TV or whatever. Long story, right? But anyway, we were at the open house. So I said, hey, Alexa, do I have any packages being delivered? Well, my voice must have sounded enough like the homeowners that she just started rambling off all of the things coming from Amazon and the projected delivery dates. Well, guys, some of them were quite personal items, and the real estate agent turned beet red. And of course, if you've listened to the show for any length of time, I have a slightly twisted sense of humor. So I tried to deep dive some of those shipments with Alexa, and the real estate agent just went over and she unplugged the Alexa and stopped me from, violating these people's shipment list. But anyway, that might be a pro tip. If you've got somebody coming over or you're going to have an open house, you might want to unplug your device because she might start talking to them. But anyway, I thought that was a funny story, and Dom and I were laughing about that because I just kicked off somebody's cell phone Alexa. But hey, Dom, what do we have question-wise over there?
Brent's been waiting. Brent wants to know, how quickly can I qualify for and close a commercial loan? I'm looking at a strip mall. It's 100% rented with good cash flow.
Hey, Brent, that's a great question. There's some really aggressive commercial loan programs that we're seeing right now. And I know that wasn't your question, but we're seeing rates in the 5s, which is remarkable considering that residential mortgages are in the 7s. But those are fixed for, 2 or 3 years, and then they start to adjust. But it is a pretty aggressive program. But to answer your question, depending on the property, there are more, and this may not be what you need from me at the moment, but I'm going to go ahead and talk about it only because there are some people who might not know all this information. But depending on the type of the property, there might be some environmental studies required, right? So for a lot of people don't realize that a dry cleaner uses toxic chemicals. And once a dry cleaner is in a strip mall, it's very difficult for anything else to go into that space. So there's an environmental phase 1 study where they look at the impact of the tenants in the property on the environment, right? So if there's an oil change facility, or I don't know how many of you have been around these parts as long as I have, but there used to be a lumber yard on Lake Worth Road across from the park there. And because of that, they stored all of their pressure-treated lumber outside. Well, a lot of those chemicals went into the ground, and it was difficult for the next people to turn it into anything other than a gas station or lumber yard. But anyway, depending on what's there, it could trigger some additional environmental studies that are required. And the reason I'm sharing that is you want to build in that timeline, right? So to answer your question, typically the commercial mortgage portion of it is going to be, 45 days or less. We can still close commercial deals in 30 days. Where it becomes a little bit more challenging is the appraisals take longer, the environmental studies are a piece, and sometimes there's a phase 1 or a phase 2 that's required, so that's additional work. The surveys may take a little bit longer because they're more complicated to do. So I encourage everybody to build in a 90-day a cycle from contract to closing. That'll give you plenty of time to do your due diligence, and then whatever environmental studies are triggered by underwriting, that can all be accomplished. But know that the start to finish timeline on the mortgage can happen quite quickly, but all of those other components of a commercial transaction may add time. But hey, my man, that's a brilliant question. I appreciate it. I'm going to toss it over to Dom to see if we have another one.
We do. Jerry's asking, why do I need to buy title insurance again? I'm trying to refinance with my bank, and they say I need a new title insurance?
Hey, that's a great question. I wish I had Jacob here. He was in the studio with us last week, but brilliant question. So title insurance insures the lender and you against any encumbrances on the title, like an unfiled lien, something from the past. Dom, I can hear you.
Yeah, it's my fault.
Okay. Are we good?
Yeah. Just start the question over. It's my fault. I forgot to mute my mic.
Okay.
Yeah.
So start my answer?
Yep, just start your answer over.
All right, so that's a great question. Title insurance in and of itself insures the lender and you as the owner, if you have an owner's policy, from the date of your ownership forward, right? So it's historic insurance, and it's insuring against encumbrances on the title that you may be unaware of. So if a contractor wasn't paid or somebody was quit claimed onto the deed and they suddenly show up waving this piece of paper, the title insurance protects you and the lender against those folks. When you refinance, the new title insurance policy protects the lender in addition to that time forward, right? The time that you own the property. So it moves that date up to the closing of your refinance historically back, if you will. So it's a little bit confusing. Probably could have done a better job of answering that, but because you're borrowing more money, you're going to need a larger policy, and it starts from the date that you close the new refinance and goes backward in time to protect the lender. So because of that gap in the ownership calendar, if you will, they're going to require a new policy. And I know it starts to feel like they're just stacking more and more fees on the transaction, but there is a need for title insurance. So hopefully that helps. If you need more information about that, just give us a call, 855-462-7292. But you hear the music, that means we're going to jump into a break. Sit tight for 2 minutes. On the other side of this break, we'll be back with more of the show.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. Guys, we've had some great questions so far, and I know I kind of stumbled and stammered a little bit going into that break about title insurance, but just to kind of clear that up, so title insurance insures the lender and the owner against historical liens or encumbrances on the title. So the day that you take possession of the property and then the past, I think I said forward, that's why I'm doubling back on this. So if there was a family member or a contractor from the past who says, hey, I got a lien on the property, then the title insurance kicks in. So if you're refinancing your loan and you've owned the property for, regardless of how long, that period of time that you've taken ownership, now any encumbrances on the title that take place during that time, that's what the new policy insures. And then there's also the ability to get what's called a reissue credit. So I would encourage you to go back to the same title company, or if you don't have a title company that you want to do business with, give me a shout and I'll get you in touch with one of our preferred relationships. But anyway, that's why the new title insurance policy is required, because there's a period of time that it was not insured by the old policy, and then you're going to want to pull your old policy from your closing package so that you're insured the reissue credit. But guys, if you want to hear what I'm talking about, if you missed it, you can always catch the replays at MrMortgageRadio.com. That's MrMortgageRadio.com. Dom posts all of the back episodes to the show up to the podcast page. So you will hear me talking about title insurance if you go on there in the next day or two and click on today's episode. But hey, I love your questions. They're my favorite part. So I'm going to throw it over to Dom so we can keep your questions coming.
Thomas sent the text. I hear your ads for a bank statement loan. I own a contracting company for 10 years. I do well, but don't show much taxable income. Would this work for me?
Hey, that is the loan program designed especially for you, my friend. Yes. So we look at the bank statements, and depending on, you said you're a contractor, so there's a calculation applied to the average of your deposits. And a contractor, obviously, you're buying materials, you're paying labor. So not all of that deposit money is actually income, because I'm assuming you've got material costs against that. But the bank statement loan program is perfect for somebody who's not showing all their income on their tax returns. And then we take an average of your monthly deposits and apply a factor to it to determine your qualifying income, if you will. So brilliant question. And that bank statement program is well suited for self-employed borrowers. But appreciate that. Hey, Dom, do we have another question?
We do. Here's an email from Elizabeth. I inherited my home several years ago from my dad. I'd like to take a small mortgage for some renovations. There is no mortgage now. Would this be considered a refinance?
Hey, that's a great question. And before I answer it, I got to go, hey, Elizabeth, I'm coming to join you, Elizabeth. I don't know why, but, you know, the old Fred Sanford reruns just jumped in my head when I heard Elizabeth. I don't know why, but I think in pictures. Anyway, yes, it's interesting, right? Because in your mind, you're not refinancing any debt, which I get. But anytime you own a property, whether it's mortgaged or not, and then you put a new mortgage on it, it's considered a refinance. And in this case, it would be considered a cash out refinance. But yes, you've got that right. You would be classed as a refinance transaction. So hope that helps. Thank you for that question. Hey, Dom, do we have time for another one?
We do. Brittany is asking, is it possible to refinance an FHA loan? I just started looking at mortgage options and wanted to make sure I have an opportunity to refinance later if rates go down.
All right. You know I'm going to do it. I just did the Elizabeth, so now I got to do Brittany. Whoops, I did it again. Tom's like, stop, please, stop. Anyway, I couldn't resist. Yes, you can refinance an FHA loan, and there's actually a streamlined refinance product for FHA, which is designed simply to lower the rate. And I'm assuming you're asking this question because if rates come down in the future, you want to be in the position to do a refinance and lower that rate. And with the FHA streamlined refi, you don't need an appraisal. You don't need income documentation. As long as you've got good payment history, it's simply a mechanism to reduce the rate. So it's a super easy refi, and appreciate that. That's a brilliant question. I'm just sitting here looking at my notes, and we've got a lot of good questions answered this week. Man, we've had some really good ones. We talked reverse mortgages. We talked commercial loans. We talked, is this house of cards going to come tumbling down because of interest rate hikes? Can we refinance an FHA loan? What happens to the reverse mortgage credit line if values go down? Guys, you brought a lot of good stuff to the table this week. I certainly appreciate you. If you missed any of that and you want to catch it again, just go to MrMortgageRadio.com. All the replays are there, MrMortgageRadio.com. But hey, you hear the music? You know what that means? We're wrapping up another week. But before I go, I've got a favor to ask. We're always trying to grow the audience. If anybody knows friends, family, coworkers who have questions, they're wondering, is it a good time to buy? Is it a good time to sell? Should I refinance? Where are rates going to go? Please introduce them to the show. They can catch all the back episodes at MrMortgageRadio.com. That's MrMortgageRadio.com. Or give us a call, 855-462-7292. When we're not in the studio, that rings to my office. So 855-462-7292. But guys, that music means we've wrapped up another week. Dom and I are off for an exciting Saturday somewhere. His Saturday is going to be far more exciting than mine, I assure you. But anyway, you guys have a fantastic week. We'll be back same time, same station. See you then.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.